She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, where the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And we're pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's a real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name. Maybe this should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up.
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views, the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice. Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. It's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. That was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars. the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to the big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change. But the ocean can also be a solution because we know that the more life that is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forest on the land that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects a migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission, track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, an equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube size concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism dies, in the case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics.
The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio, also my home in New Jersey, streaming on YouTube. It is Thursday, December 17, 2020. Carol Masser along with Tim Stenovic, host of Bloomberg Quick Take. And I know you guys talk about this a lot. Bitcoin at a record again.
We talked about it today. This is the first time ever, Carol, that it's breached 23,000.
Right.
And get this, it was just a few days ago that it hit its previous record, right?
Right.
Crossing, I think it was 18,000.
Yeah, exactly. It's like record after record after record. So we're going to get into what does it mean. And I feel like, you know, it's a world where we have so many questions, so many uncertainties. I'm curious about if this run-up is different from the run-up we saw just a few years ago. So we're going to get into that over the next few hours. First up, though, let's get a check on not our Bitcoin trading day, but our regular trading day. Here is Charlie Pellet.
Hi, thank you very much. Happy Thursday to you both. Snowy day in New York, but a lot of sunshine on Wall Street today. Looking at records right now for the Dow, the S&P, NASDAQ Composite Index. You got to keep it locked into Bloomberg Radio to find out where we close. Will we see new highs? And, of course, what happens with Asian markets tonight? Right now, the S&P is up 18. I'll give you the Y in a moment. Up 0.5%. The Dow up 124, now up 0.4%. NASDAQ up 86, up by 0.7%. 10-year down 6/30 seconds. 10-year yield 0.93%. Stocks holding on to gains, putting them at new highs after data showed a further slowdown in the labor market, but that is stoking bets. Congressional leaders will clinch a deal on federal spending. Gold Gold up now by 1%, higher by $19 the ounce at $18.84. Crude also rallying. West Texas Intermediate up by 1%, $48.29 a barrel. Brent, the global benchmark, $51.38, up by 0.6%. Also keeping an eye on shares of Scopus Biopharma. It's a cancer therapy developer. It is surging now by 573%, following a 7.6% jump in its debut yesterday. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm sorry, was that Bitcoin or something else, Charlie?
Exactly.
Wow.
Scopus up 560, ticker SCPS. Put it onto your charts and graphs today, a stock we're watching.
God, what a year, what a year. So much to talk about, Tim. Let's bring in our team because we've got our Business Week agenda. Mike McKee's with us, international economics and policy correspondent at Bloomberg News on the phone in New York City. Dave Wilson with us, stocks editor at Bloomberg News on the remote access from New Jersey. And Mike, I do want to start with you. Listen, we were like cheering for you. You got in that last question to Fed Chief Jay Powell yesterday, but it's also weekly jobless claims numbers today, and they were a little bit disappointing to say the least.
Yes, they were 885,000, definitely going in the wrong direction, much higher than anticipated, much higher than last week. It just shows you that with the coronavirus raging out of control, more and more states are ordering more and more businesses to close down, and people are going onto the unemployment rolls. We've talked in the past about how you can't really trust the actual number, but you can certainly see the direction that they're going in and realize that it's not good.
Well, all of that said, the S&P 500 climbing for a third day. We're seeing records right now. Why the disconnect here?
I think what's happening, and Dave Wilson is going to know a lot more than me, but I think what is happening is investors are looking forward into mid-2021, end 2021, thinking we'll get past this. We've got vaccines now. The economy will come back. And Jay Powell talked yesterday about how the Fed had underestimated the speed of the recovery so far. And you look at what other numbers we got today, the housing starts numbers, they were up more than anticipated, and they're up over 12.5% on the year. The Fed directly helps that because they have interest rates so low that mortgage rates are at record lows. They can't do much about the jobs numbers. So I think also the markets are looking at what's going on in Washington and thinking, well, if they come up with fiscal help, then that helps on the labor market side, and then we've sort of got a safety net under the economy.
There was so much that Fed Chief Jay Powell said, Mike, yesterday that really just stood out for me, including, he said this could be another long expansion based on trends. I just felt like he was kind of setting the stage, looking ahead.
Definitely, and they've made a promise now that they're going to keep interest rates low for several years, near zero. And if this is what we're getting in housing and auto sales and things like that, with rates at zero now, we should be in good shape.
Yeah.
The cost of credit, at least, is not going to be a problem for anybody for a while.
All right, Dave Wilson, just hang in there patiently. Thank you so much, because I just kind of wanted to pick Mike's brain a little bit about all that we got from the Fed yesterday. So the equity trade today, there is some enthusiasm. Is it a healthy trade? Is it broad-based?
Yeah, I mean, it's fairly broad-based at this point. You look at the 11 main industry groups in the S&P 500, 9 of them are higher. The exceptions are energy and communications. But, just to kind of pick up on your discussion with Mike a little bit, you get economic numbers that aren't so great, and it's almost like the stock market at this point arguably turns into the bond market. Usually when you get numbers that don't go over so well, there's the anticipation that interest rates are going to stay down, and, that means higher yields for treasuries and the like. Now you're in a situation where there's so much focus on what's happening with the stimulus plan that, you get economic numbers that aren't so great, and okay, people figure there's more incentive for, Congress to actually get something done after months of going back and forth on the issues. So, that's sort of how people are looking at things in large measure. And also Mike's point about the housing market and how it's being affected by the Fed and its monetary policy. You certainly have seen that play out today with the home building stocks, specifically Lennar, which is up more than 6%. They had numbers out late yesterday for the fiscal fourth quarter that went over well. Projections that beat analyst estimates, at least the ones we surveyed here at Bloomberg. And then you look across the group and you see The company's peers in the S&P 500 following suit, NVR, D.R. Horton, Pulte Group, all up more than 3% at the moment.
I mean, we heard Fed Chair Jay Powell talk about that yesterday, that housing supply will respond to the constraints that we've seen and the demand that we've seen in the last few months. Dave, what happens when we do get a deal from Congress? Do stocks move at all, or is this all priced in already?
Well, you have to figure, with the possibility of records today across the board, Dow Industrials, S&P 500, NASDAQ, Russell 2000, you could argue that a lot of that's already kind of reflected of some kind of a deal coming through.
All right. Mike, what are you keeping an eye on? And can I just ask you? I mean, there's a list, there's a lineup, right, in terms of who gets to ask the Fed chief questions, because we noticed that Bloomberg started it and ended it.
I think everybody noticed that, Carol.
Did we lose Mike?
Might have lost Mike.
Did we lose Mike? Yeah.
Can I just point out a headline that hit a moment ago? Coinbase, the digital currency exchange, filing to go public.
That's fitting. Mike McKee, did I hear you in the background?
Yes, I'm here. I'm here, as the Munchkin said.
What's the lineup? Is it just it changes from meeting to meeting?
It changes from meeting to meeting. There have been times when I'm first, times when I'm in the middle, and times when I'm at the end. So it all depends on who they want to call on.
Yeah, it was nice to see Bloomberg bookending it all. Hey, guys, thank you so much. Of course, Michael McKee, International Economics and Policy Correspondent at Bloomberg News, along with Dave Wilson, Stocks Editor at Bloomberg News on the remote access from New Jersey. And Dave, of course, bringing that headline, Coinbase filing confidentially for a stock listing. Listen, one thing we've seen, Tim, is a hot IPO market this year.
Yeah, we really have. The Coinbase one for me sort of came out of nowhere, though, because it makes sense, though, on a day where we're seeing a new record high for Bitcoin.
Yep.
The company obviously wants to capitalize on the renewed interest in cryptocurrency. As you mentioned, are we going to see something that we saw with Bitcoin that we saw a few years ago, which was a years-long lull until enter 2020 when it gained huge popularity again and saw institutional investor interest too?
Yeah, and that's what I think is interesting. I want to find out if the institutional, and you see, traditional credit cards lining up too and doing Bitcoin, kind of rewards offerings. So I feel like there's something different this time around. So we're going to dig into that. We've got to, because it really is a big story today and really a big story of 2020. What does it all mean, this run up in Bitcoin? We're going to get the latest on the virus and the vaccine. We've got a great cover story this week. The work from home boom here to stay, but get ready for some big changes, including maybe pay cuts.
Yeah, that was one we saw a preview of in Silicon Valley, but this could extend throughout the country and in different industries too. It's a great story, and I'm excited to hear from Joel on that one.
Yeah, exactly. Lots to come over the next few hours. Let's kick things off, though, with a check on world and national news. For that, let's head over to D.C. and Nancy Lyons. Hey, Nance.
Hey, Carol. How are you? An FDA advisory panel today is looking at the second coronavirus vaccine that's being considered for emergency use. Acting Chair Dr. Arnold Monto opened today's meeting with the key directive.
We have one topic for today, a topic to discuss and vote on, the emergency use authorization of the Moderna COVID-19 vaccine.
The FDA staff issued a positive review of the Moderna vaccine earlier in the week, confirming its safety and effectiveness. And if today's panel gives a thumbs up, the FDA is expected to give the green light within hours or days. A Pfizer vaccine got the go-ahead last week. And we're learning that regulators are revising information and monitoring of the Pfizer vaccine after rare allergic reactions were reported in some patients. 2 people in Alaska who received the Pfizer-BioNTech vaccine suffered those reactions, which have also been seen in vaccine recipients in the UK. Well, another drug is in the spotlight today on Capitol Hill. Members of the family who own OxyContin maker Purdue Pharma have been defending their role in the nation's long-running opioid addiction crisis. David Sackler agreed to testify after being threatened with a subpoena.
It was my family's intention, and I believe the whole board's goal, to create products that helped patients. OxyContin is an FDA-approved medication available only by prescription and has been prescribed by doctors to relieve the suffering of millions of Americans.
Today's hearing, though, comes 3 weeks after Purdue pleaded guilty to 3 criminal charges as part of a sweeping settlement with the Justice Department. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy Lyons, thank you so much for that update. You are listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic, and we're going to talk a lot about the virus in just a moment and the vaccine, but Bloomberg's Janet Wu recently caught up with Dr. Ofer Levy, head of the Precision Vaccine Program at Children's Hospital in Boston. Dr. Levy, also a longtime advisor to the FDA, and is on that panel voting on emergency authorization for the COVID-19 vaccines, including that one of Moderna, which is happening today. In this excerpt, he describes how the FDA panel, how that process works. Check it out.
We each come in with our own expertise, and some of that is scientific expertise, clinical expertise, public policy expertise. Most of the members are either MDs or PhDs or both. In my case, I'm a physician scientist. I'm an MD, PhD. And we're coming from all over the country, a very diverse group. And we read the briefing documents even before they go public. We are not supposed to discuss them in groups. We're supposed to come into the process with our own, each with our own independent assessment documents. And as you know, it always centers around safety and efficacy. Hear presentations from the sponsor, from FDA that conducted its own independent analysis of the data provided. We hear the public commentary. We hear from CDC around the current status of the pandemic. And let's not forget in the background here the terrible statistics of 2,000 to 3,000 Americans a day dying of this deadly disease. And we weigh all of this with a focus on, do the established and suspected benefits of the vaccine in question outweigh the established and suspected risks?
And that was Dr. Ofer Levy, head of the Precision Vaccine Program at Children's Hospital in Boston, an advisor to the FDA on that panel voting on emergency authorization for vaccines, catching up with our Bloomberg Janet Wu. You can check out that entire interview on the Bloomberg and also at Bloomberg.com. That independent panel, that's what gives me kind of assurances, I think, Tim, when it comes to a vaccine.
Yeah, and look, the idea here is to get this out as soon as possible, and we're seeing headlines right now from California, a record in California for virus hospitalizations at 3.3%.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are at records right now. The Dow, the S&P, NASDAQ all advancing. Stocks are moving higher after data this morning showed a further slowdown in the labor market. That is stoking bets congressional leaders will clinch a deal on federal spending. S&P up for a third day as lawmakers continue to negotiate details of almost $900 billion in coronavirus aid. Right now, the S&P 500 index up 20 to a record 3721, up 0.5%. The Dow's advancing 132 points, up by 0.4%. That is a record right now. NASDAQ also at a record, up 93 points, up 0.7%. 10-year down 5/30 seconds. 10-year yield now 0.93%. Gold up 1.1% higher by $21 the ounce at $18.86. And West Texas Intermediate crude up 1.3%, $48.42 a barrel. DoorDash shares are falling today after short seller Citron Research called the initial public offering of DoorDash, quote, the most ridiculous of the year, and said the stock is worth a fraction of its current price. DoorDash shares, they're lower now by 2%. Recapping, S&P up 19, up 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So a lot going on, as we know, as there is, it feels like almost every day when it comes to, of course, COVID-19. And we are awaiting maybe some emergency authorization when it comes to Moderna's vaccine. So we're following that. This is on a day when global virus cases passed 74.3 million, deaths top 1.6 million. And we're just seeing these numbers continue to go higher. I should say that the U.S. hit a record 3,835 deaths yesterday. Let's check in with Carrie Althoff. She is Associate Professor of Epidemiology at Johns Hopkins University, Bloomberg School of Public Health. She's with us on the phone from Baltimore, the Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Carrie, it's good to have you here with Tim and myself. I always feel like on every day I'm not quite sure where to start. What is, you think, first and foremost when it comes to COVID and the vaccine today that you think our listeners need to be aware of?
I think everyone needs to know that these hearings are going well. The scientific rigor, which the investigators and the experts that have been brought in from lots of different places, the rigor with which they're looking at this data is really important. They are asking questions, some of which there are answers for right now, some of which there are not yet answers for, and so there are ideas about how to continue these trials. It's really important to figure that piece out because right now, thankfully, so many people want this vaccine, and we need to keep pushing for that because as these vaccines become available, of course, they only work if people actually choose vaccination.
Carrie, we learned also in recent days about sort of the first here in the U.S. response that wasn't so great to a vaccine, the first allergic response. And this was a healthcare worker in Alaska who didn't have a history of allergic reactions, but this person was held overnight in the hospital and it got a lot of coverage. Is this something that how should people who want this vaccine think about news like this?
So I would say this, we have to remember that reactions to vaccines, even severe allergic reactions, do happen to a number of vaccines. It is something that's expected, and that's why when you get a vaccine, you're typically doing it in a healthcare setting where those individuals who are administering the vaccine are also trained in how to essentially give you an epi shot if you need it for anaphylaxis or other types of allergic reaction. So first of all, we know that allergic reaction is something that happens. Of course, whenever there's a new product, we scrutinize every single one of these events. We want to know when it happened, how it happened. We want to know all of the information about it. But I think we also have to put it in the context of we know that these types of reactions happen to vaccines and other medical products. And we also know that there are a lot of people in these trials who have been receiving these vaccines. It's something we will definitely be keeping our eye out. But right now, there's no reason to believe that the anaphylaxis rate after vaccination is substantially higher with this vaccine than what would be expected.
And Carrie, help me out, because this is something we've asked a lot of, your colleagues at Johns Hopkins and other members of the medical community, is that my understanding is that if there is a severe reaction to a vaccine, that you know it within the first month. But again, we're working with new technology, new science. Is that accurate, though?
So typically, basically, in order to link the actual reaction back to the vaccine, there's a long process that goes on where you really scrutinize everything. Of course, if it happens pretty quickly after the vaccination, and some people say 1 month in some of the Moderna data that was presented, it was the Pfizer data that was presented. The reaction happened quite a few months later. And so, actually tying these reactions to the vaccine itself, sometimes people do put on a timeline like 1 month, but really it comes down to the data that are uncovered when that reaction is investigated.
Just from the standpoint of somebody with your background, an epidemiologist who studies AIDS and does AIDS research and HIV research, what do you make of the development of the vaccines that we're seeing right now? How big of a deal is this?
It is absolutely scientifically historic. It is hours and hours and hours of scientists, pouring their hearts and souls into trying to figure out how to get this pandemic stopped with one of the most important biomedical tools we will have against coronavirus, which is vaccination. We cannot say that it is the prominent tool yet in our toolbox. Of course, we only have one vaccine that's EUA'd. Hopefully we'll have two probably by Monday. And we're moving forward. But we still have to wear masks. We still have to social distance. We still have to take all of this very, very seriously. Even this week, there was an interesting analysis looking at excess deaths in persons 25 to 44. I mean, these are people that we've been saying, that they're not at the greatest risk of death. And although that might be true, losing someone in that age group, someone who is a young mother or father, someone who's someone's brother or sister, a person who is a productive member of our society, losing them to COVID is really a tragedy, as are all the deaths due to COVID. But this excess death in this age group is really, it's shocking, it's compelling, and it just reminds us that although these vaccines are absolutely scientific history, it is also a time where we have to continue to rely on all the layers and all the tools in our toolbox to keep each other safe.
Right. We have to be vigilant, no doubt about it. And we continue to learn more and more about COVID-19 specifically each day that goes by. Hey, we're going to come back to Carrie Althoff. She's Associate Professor of Epidemiology at Johns Hopkins University, Bloomberg School of Public Health. As we would like to remind everybody, that school, of course, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. I mean, listen, I feel like every time we think we figured it out, Tim, Carrie reminding us, whether it's younger people, like we're just finding out new things every day about the virus.
We are. This is science playing out in real time. Who knew we would learn so much about vaccines in 2020? But hey, that's what it is, and it cannot come soon enough, Carol.
Yeah, agreed. All right, you're listening to Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Massar, I'm working from home today. Tim Stenovic back in our Bloomberg Interactive Brokers studio in New York City at Bloomberg headquarters. We're going to get back to Carrie Althoff over at Johns Hopkins. Interesting conversation, right?
Yeah, it really is. And it comes at another day where we're seeing record deaths. It just feels like we're getting numb to this, Carol.
Well, God, those numbers, and we're seeing it around the world. So we'll continue because she's giving us some hope, though, in terms of the more and more we learn about the vaccine and getting that out there to the public. We'll get back to her in just a moment. Let's get back, though, to your top business stories. Check in once again with Charlie Pellet.
Hi, thank you very much. Here's what's going on. The Dow, the S&P, and NASDAQ all pushing higher. We are looking at stock market records now with the S&P up 20, a gain of 0.5%. The Dow up 132, higher by 0.4%. NASDAQ up 89, up by 0.7%. All three on track for a record close today. Dow Transport's up 1.2%. NASDAQ 100 index up by 0.5% by comparison. The composite index for NASDAQ up now by 0.7%. The year-to-date number on NASDAQ, 42.1%. 10-year down 5/30 seconds, 10-year yield 0.93%. Gold up 1.1%, 18.85 the ounce. West Texas Intermediate crude up 1.1%, 48.36 a barrel. Stocks holding on to gains after data this morning showed a further slowdown in the labor market. That is stoking bets congressional leaders will clinch a deal on federal spending. Bitcoin breaking through 23,000 today for the first time ever. French President Emmanuel Macron has tested positive for COVID-19 and will isolate for 7 days while continuing to work. As we've been reporting, record deaths now from the coronavirus. One concern for medical experts as they roll out the vaccine is reports of allergic reactions. 2 cases in Alaska in recent days. Dr. Jason Farley is a nursing professor at the Johns Hopkins Bloomberg School of Public Health.
Importantly, there are safety measures in place. Once we give a dose of vaccine, we have the individual wait for at least 15 minutes to ensure that there is no anaphylaxis or allergic reaction. And if there is, we have clear protocols in place to address it. Importantly, we don't yet know exactly what component of the vaccine results in anaphylaxis. So the FDA recommended that individuals with a history of severe allergic reaction not receive the vaccine at this time.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine names, Pfizer shares up today by 0.5%, BioNTech up by 0.1%, AstraZeneca, the ADRs down 0.6%, Moderna is up by 4.6%. Recapping U.S. stocks trading at records, S&P up 19, up 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, and we've got more from the team over at Hopkins. Let's get back to Carrie Althoff, Dr. Carrie Althoff, Associate Professor of Epidemiology at Johns Hopkins University, Bloomberg School. Phone from Baltimore. So, Carrie, how do you see kind of the next few months playing out for our world here in the United States in terms of virus numbers and also vaccine rollout?
So it's important to note that right now, the best tools we have to reduce the number of new cases and to reduce the number of deaths are the tools that we've had since the beginning, really, which is wearing your mask, staying home unless you absolutely have to, and making sure that you're keeping space from each other when you're in public or in any enclosed environment in particular, but even outside. So essentially what we're trying to do is just prevent that virus from transmitting from one person to another, right? Don't give it a host. So don't get too close is really the name of the game. And we need to put these practices in place and continue with these practices until we do have a more widely distributed vaccine. With the Moderna news today, we hopefully will have a number of vaccines rolling out over the course of the next couple of months, which not only increases the numbers, but also interestingly, it could perhaps give people some options, right? So if, for example, a vaccine works better in older adults versus younger adults. One thing I just wanted to correct from earlier is that the case that I referenced of an individual developing anaphylaxis more than 2 months after being vaccinated, this actually was prompted. It came from Jacqueline Miller, the vice president for Infectious Diseases Development at Moderna during FDA hearings today. It was prompted by a question from Mark Sawyer, who's a professor of clinical pediatrics at the University of California, San Diego. And he said, Moderna has done a number of phase 1 and 2 clinical trials of mRNA vaccines for really 8 other pathogens over the course of the last few years. And so he said, hey, have you gone back into that data and looked to see if those earlier trials, if there were reports of anaphylaxis among patients? And that's when Jacqueline Miller said, well, there was this one report in a woman with a soy allergy, and she developed this more than 2 months after being vaccinated. And so it does bring up this question of, okay, maybe this triggering of anaphylaxis, it might be different across different vaccines, and we shouldn't just take what is happening in one and apply it to a different vaccine. And that's what Moderna's chief medical officer also noted, that, we have to watch each of these vaccines carefully, right, and so we know who should be using which vaccine.
So no blanket assumptions really along the way.
I would be really hesitant right now to do a lot of blanketing assumptions. These are big trials. We will be following these wonderful volunteers well into the future, and so we'll let the data show us what it needs to show us.
But given that the supply of this is so constrained and there are so few vaccines available right now, when will people actually have the option to take one vaccine over another if they do have concerns about anaphylaxis?
Well, I think for a lot of people, the choice in vaccines, of course, has to come after at least more than one receiving EUA, which hopefully will come very soon. But then it will be this rollout process coupled with the tiering process, right? So who is the top priority right now? It's the healthcare workers and the individuals who are living in long-term care facilities. And so once we get those populations vaccinated, hopefully we will have higher production of at least 2 vaccines. And so when this vaccine starts to roll out to the more generalized population, there may be some more options.
Yeah, really interesting. Hey, just real quickly, just got about 30 seconds. What are your hopes for the incoming Biden administration come January?
I hope they stick to the science and they let the science lead the way, and they are putting together people and teams that are true followers of the science. They are empathetic, compassionate people, and I think that is the unstoppable combination, to have empathy and to move forward with the science so that this virus gets stopped and we get back to living our lives in a healthy way.
Yeah, I think that's a really good message in terms of really sticking to the science, because it says so much. Carrie, thank you so much. Dr. Carrie Althoff, Associate Professor of Epidemiology at Johns Hopkins University, Bloomberg School of Public Health, with us from Baltimore, the Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. But it is so interesting, Tim, like every time, everybody goes back to it and it makes sense. Masks, social distancing, like there's just those basic things that still work.
Yeah, follow the science, right? It's what we've learned and what we've heard from health professionals throughout the pandemic, and it's where we can find the answers. Science.
Yeah, exactly. It just comes down to that. Great conversation. Let's get a check on world and national news. For that, over to Nancy Lyons in our 99.1 newsroom in the nation's capital. Hi, Nancy.
Hey, Carol. Senate Majority Leader Mitch McConnell says he is heartened by the progress on another coronavirus relief bill, but believes negotiators have certainly reached a fork in the road.
Do we want to haggle and spar like this was an ordinary political exercise, get wrapped around the axle of language or policy riders that we know are controversial? Or, on the other hand, after months of inaction, do we want to move swiftly and with unusual bipartisanship to close out our issues, seal the deal, and write text that can quickly pass into law?
He says it is possible lawmakers will work through the weekend to reach a compromise. Well, the U.S. is sounding alarm bells about the scope of a suspected Russian hacking spree. In an advisory posted today by the agency tasked with tracking cybersecurity, it says the online incursion posed a grave risk to federal, state, and local governments, as well as critical infrastructure, as well as the private sector. Well, the Food and Drug Administration is hinting Moderna's coronavirus vaccine will get approval quicker than the vaccine from Pfizer. FDA advisors are gathering today to discuss the next vaccine, looking for U.S. distribution and use. Dr. Jasmine Marcelin is with the University of Nebraska Medical Center.
After reviewing the available information about the mRNA vaccine developed by Moderna, I'm encouraged by the 94% effectiveness demonstrated.
The Moderna COVID vaccine is similar to the Pfizer vaccine already approved. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Masser, along with Bloomberg's Quick Takes anchor, Tim Stenovic. And, we're living in interesting times, and I know we're going to talk about Bitcoin a little bit later on, but we're seeing a pretty healthy and busy IPO market. But then we've also seen, because of what's going on with the coronavirus, I think there's an increased new interest when it comes to investors among the biotech world.
Yeah, there really is, and we're seeing it play out today after a pair of biotech companies were actually halted after the IPO trigger has crazed these massive rallies. So Scopus Biopharma soared more than 700% on Thursday. That's not a typo. You heard me right. 700%.
Yeah, Charlie talked about it earlier, right? And we were just kind of like, what? It's a cancer therapy developer, and it was up about 7.6% in its debut yesterday. And then there's another company, medical technology company, I think it's Vivos Therapeutics. It did trim its advance to 28% or so when trading resumed after almost doubling earlier in the day. And listen, I remember the dot-com bubble, and you just threw .com on the end of a name,
right?
And it didn't matter if you weren't making money. It didn't matter if you were just only around for a month or so. But you could just IPO and just shoot up. And as we know, that was a bust.
It was, and I wonder to what extent this time is different. And when you talk to people who like to say this time is different, they say, wait a sec, these companies like Airbnb have already been around for a decade. They have a proven business model. They didn't just add a .com at the end of it. So we have a difference there. But when you see stories like this, when you see the disconnect between Main Street and Wall Street, you have to wonder, when is Main Street going to catch up?
And what's the role of Robinhood and all these individual investors who have all of a sudden, I remember the day trader market, right? And just everybody was in there and playing volatility and then jumping on, a name when we started to see some big movements. So you do wonder, Tim, how much momentum they are contributing to these moves.
The retail traders who are getting into it this year, Robinhood has seen amazing growth this year.
It's pretty remarkable. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are holding on to gains as lawmakers in Washington wrangle over aid. Final details of nearly $900 billion in aid still under debate. Right now, the S&P 500 index up 19 points to a record 3720, a gain of 0.5%. The Dow also to record up 131 points, up 0.4%. Any close in the green today for NASDAQ will be another record up 86 points, now higher by 0.7%. 10-year down 430 seconds, 10-year yield 0.93%. Gold up 1%, 18.84 the ounce. West Texas Intermediate crude up 1.1%, 48.34 a barrel. After the bell, we'll be hearing from FedEx. FedEx shares up now by 1.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the cover of Bloomberg Business Week this week is the work from home boom. It is here to stay. And as a result, get ready for some changes, including, everyone, some pay cuts. It's really all about the urban exodus and the implications, because it has the potential to impact so much in our world and economy. That story by Bloomberg News finance reporter Noah Buheier, who joins us on the phone from Seattle, along with Bloomberg Business Week editor Joel Weber on the Access line in Brooklyn. And Joel, kick it off for us. I mean, I do feel like this working from home thing has massive implications, and Noah really lays it out in this story.
Yeah, that's right. I mean, we've been watching this trend just evolve throughout the pandemic, and it started with people, basically that urban exodus, people leaving cities and going to the suburbs or the country, and then instead of renting some of those places, people started buying, and then the employers started to catch up with it eventually, and that's really kind of the new element, and I think the one that really distinguishes Noah's story has been, the shift was, at first it was just the real estate implications, but now it's about the pay implications. And Noah's reporting actually centers on a company, Redfin, the real estate company, and they actually almost become the vehicle for the story. So Noah, tell us about this trend and what we've learned through Redfin.
Yeah, well, I think you really captured it. I mean, this is a trend in HR policy right now. We've had this massive experiment in working from home, and I think a lot of companies have found that it works for people. It's not perfect. There are for sure some drawbacks, but as we've gone through the months, companies, I think, responding to what they're hearing from their workforces, have realized that they can allow for a much greater amount of remote work when the pandemic's finally over, and that's forced them to really reckon with policies and how you actually make this work in a way that's fair and reasonable for your business. And really, it's just opened up a giant can of worms, because the cost of labor and the cost of living just varies so radically across the U.S. that you could create situations where, if someone moved from the Bay Area to Phoenix or to Atlanta, they carried their salary with them. They just you'd create a situation where you were paying way above market, essentially.
Okay, so the Redfin thing that's so interesting, though, is that once people sort of moved out, and the company had to grapple with this, and they were actually proactive, I think, in having a plan, basically. They basically realized that in order to implement this, they needed to have some version of like a localized pay policy, right? So tell us about how they actually went about implementing that.
Yeah, so on some levels, like, companies have been doing this for years, right? It's just they've thought about, well, if we open a new office in a new city, what do we pay people? What's interesting is that Redfin, and I think a lot of other companies, had to do this on a mass scale. So what Redfin did is they got a bunch of data on cost of labor and cost of living. They're a real estate company. They're in the home brokerage business, so they're pretty attuned to this stuff and have a lot of in-house data. But they got external data as well, to try and craft a policy of what's fair. And the data informed their decisions, but there were a lot of judgment calls at the end of the day. And, they're still tweaking and trying to make sure, their policy works for their people, and that they can continue to recruit and retain the best people. Because at the end of the day, that's really what this is about for companies. Is, you know, there's, even with unemployment where it is today, for certain kinds of jobs, there's still an insatiable appetite and demand for people. And, you know, as companies compete for talent, they want to make sure they're paying the right amount in the markets where those people want to be.
Noah, there's something you explore in the piece, the economic implications of this. The idea that people are leaving higher cost areas, moving to areas that aren't as expensive. And with that, of course, if they're leaving a city or a state, with them goes tax base, with them goes spending in that local economy. What are the long-term implications of this migration?
Well, I don't think we know yet is the short non-answer. But it certainly doesn't seem like it's going to be helpful for high-cost places like New York and San Francisco as they, you know, as the whole country tries to dig itself out of the economic implications of the pandemic. I mean, it's not helpful when you have high earners leave your city. But at the same time, like, we just don't know at this point how extensive this is going to be, and there are some real benefits to living and being near where the action is, where there are other people in your industry, and you know, that could be a draw for people to come back to some of these high-cost places.
Well, this is the thing we don't know, right, Noah, yet, whether or not this kind of urban boom, you know, and away from that urban boom, whether or not that's going to stick. Because if you talk to a Jamie Dimon, if you talk to the heads of a bunch of financial companies, if you talk to the head of Netflix, as you put in your story, they're not so on board and think that this working from home thing is going to stick.
Yeah, I mean, I think what we're seeing a lot of companies do, I mean, Google was a recent one. They're gonna go towards a more hybrid model where people would come back in like 3 days a week. That doesn't necessarily free people up to leave the high-cost city, but it may encourage them to move to a suburb where they might not have done that before if they were commuting in 5 days a week. So there's both moves across the country, but there are moves within metros, which have real implications for housing costs. I mean, we've seen this all year. And Redfin has seen this in their business. I mean, suburban houses, I mean, people want single-family homes with a yard because of the pandemic, but they're also looking forward to what life might be like when offices reopen. And maybe it's not so bad if you have to do that longer commute because you're only going in 2-3 days a week.
So Noah, you got really good access at Redfin, and I'm going to ask you to extrapolate here. How willing were employees to take this pay cut? I mean, obviously it's coming from HR. You can keep the job, but you can have a pay cut. I think that is, to me, the biggest question here is, like, if employees are actually willing to do this, but that willingness also depends on just probably how big the pay cut is, right? So talk to me about the willingness to participate.
Yeah, I mean, look, the employees I spoke with who were making these moves, I think ultimately felt like the numbers were fair, and that's because, you know, when you move to some of these places where your pay is going to be lower, your cost of living goes down usually by even more. And Glenn Kelman, the CEO of Redfin, argued to me, and I was pretty persuasive on this point, but I think it's reasonable to expect that as more employers offer remote work possibilities, we're going to see wages rise in some of these places where the cost of labor is lower. So, you know, wages in Texas are going up, and you might also see housing costs in places like Boston go up as well. But to think that these things are static is not right.
It's a great story. We're going to talk a little bit more about the migration to Texas a little bit later on. Noah Buhire and Joel Weber, thank you so much. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, we're going to continue. If you're listening on Bloomberg 106.1 in Boston, Bay State Business, that's coming up next.
Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a number of developing stories. First of all, let's begin with the United Kingdom, where Prime Minister Boris Johnson says the EU trade talks are, quote, in a serious situation. A Downing Street spokesperson commented after Johnson spoke with European Commission President Ursula von der Leyen. The spokesperson said, quote, the Prime Minister underlined that the negotiations are now in a serious situation. Word from the Coca-Cola Company that it is cutting 2,200 jobs worldwide, including 1,200 in the United States, as the soda maker deepens its restructuring efforts amid ongoing shutdowns of soft drink-friendly venues like movie theaters, bars, and stadiums. Checking shares of Coca-Cola, they are up now by 0.4%. But again, Coca-Cola, based in Atlanta, says it will be cutting 2,200 jobs worldwide. It is an up day on Wall Street with the Dow, the S&P, and NASDAQ all advancing on optimism about stimulus discussions underway in Washington and signs of progress. The S&P up by 20, up 0.5%. The Dow's up 144, up by 0.5%. NASDAQ up 84. That is a gain of 0.7%. 10-year's down 4/30 seconds. 10-year yield 0.92%. Gold up 1%, higher by $19 the ounce at $18.84. And West Texas Intermediate crude up 1.1%, $48.37 a barrel. The Labor Department says initial jobless claims in regular state programs rose by 23,000. Stephen Stanley is chief economist at Amherst Pierpont Securities, and on Bloomberg Television and Radio this morning, he said there may be other things going on with that number.
I think with the claims numbers, a big part of the issue is the changes in the program, the extra benefits that were on offer earlier in the year just led to a lot of unusual activity, people filing that weren't eligible before, probably a lot of people filing that shouldn't have gotten benefits. So the levels of those claims numbers are definitely off.
Recapping, S&P up 19 at a record, up 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser on Bloomberg Radio.
This is Bloomberg Business Week on this Thursday. Carol Masser along with Bloomberg Quick Take anchor Tim Stenovic. And top story at this hour, and I guess, Tim, I think it's going to be safe to say it's been a top story this week, and it's going to end up being one of the top stories of this year.
I think that's fair.
Right?
We're talking Bitcoin, right?
We're talking Bitcoin, and we saw cryptocurrency exposed stocks soaring today as well. We talked about that a little bit earlier. Bitcoin topping $23,000 per token, having only surpassed the $20,000 milestone for the first time. That was yesterday. So it is really just moving up. As Bitcoin surges to record highs, Scott Minerd, our audience knows him well, Chief Investment Officer over at Guggenheim Investments, he believes the world's largest cryptocurrency's fair value still has a long way to go. He shared this with our colleagues over on Bloomberg TV.
We made the decision to start allocating toward Bitcoin when Bitcoin was at 10,000. It's a little more challenging with the current price closer to 20,000. But having said that, our fundamental work shows that Bitcoin should be worth about $400,000.
$400,000.
$400,000. My understanding is Scarlett Fu over at Bloomberg TV, when she heard that, was like, what?
She was. We played this on Quick Take this morning because it's just the reaction is really one of, whoa, $400,000? This is something that, is at $23,000 now, and that's got a lot of people scratching their heads.
Exactly. So let's get into what we need to know about the rise in Bitcoin. Joining us is Bloomberg Intelligence commodity strategist Mike McGlone. He's on the phone from Connecticut. Mike, so good to have you here with us. So first of all, what's behind the rise? Is it just a basic supply and demand, or what's going on here?
Hi, Carol. That's a lot of it. Bottom line, basic supply and demand is this year we cut supply by a half, and the last time we did that was 2016. In 2017, Bitcoin increased from 1,000 to 20,000. So I think we just broke above that 20,000 threshold. So what was resistance is now probably going to be key support for next year. And then you open, demand is really picking up from institutions. It's become a bit of institutional FOMO. And a key factor is the macro. Look at debt to GDP, QE, MMT. All that is very positive for Bitcoin. And I think what we're seeing also is there's a migration from what a lot of assets that used to be more focused on gold going to the new digital version of
Why is it you said that what's going on is good for Bitcoin? Is it just seen as a now new safe haven, or what?
Yeah, well, it's a new safe haven for a future that's becoming more digitalized.
Okay.
And just think of what's really happened in this world. People don't want to really touch paper money, so everything is going digital. We don't really want to play with money. And then it's also that store of value. So it's got the macroeconomic factor. So I looked at, like to say, it's not really a store of value yet because it's too young, but it's getting there. So based on my projections, the volatility of Bitcoin, which is about 2.5 times that of gold on an annualized basis, will probably match the same volatility of gold in about 4 years. So basically, by the time we get to the next election, and the next time that supply will be cut in half.
Wow. So apart from FOMO, what are institutional investors seeing as the purpose for Bitcoin and other cryptocurrencies when they're building portfolios?
It's a store of value that has not really found its price yet. It's in that price discovery stage. So it's kind of a unique space. And it's kind of scary to me. It's like it's become almost too bullish. But I don't see the bearish case unless it's something I can't predict, like in the technology, some kind of failure, some kind of hack, or maybe some kind of banning. But other than that, the supply and demand, and just looking forward to this future going digital, it's a way to transport and really hold on to wealth, but on a thumb drive or in your head or on your phone. In the past, gold's a little clunky, and then you have this world of what are the competition. The competition is the stock market at an all-time high and negative or zero bond yields.
So it sounds like you're saying there's room for this to go higher, not necessarily too much concern about it going lower, at least long term, because I have friends. When this happens, I always get friends texting me, hey, should I buy Bitcoin? Is it too late to buy Bitcoin? Obviously, I'm not giving financial advice. You're not giving financial advice. But how would you answer that question?
Well, I like to say you have to put yourself in the future. If it fails, everybody's going to forget about it and doesn't care. If it succeeds, the question will be, Grandpa, why didn't you buy Bitcoin when it was only $20,000? So, or Grandma. And I think what Scott Miner's point about 400,000 is pretty accurate. It's just a question of time, because that's about gets to where it's similar on its same scale on a market cap basis versus gold. But for this year, I'm a little more conservative. I'm looking at 50,000 as the key next resistance, because that would put the market cap around about $1 trillion versus 400 or so million now.
But listen, Mike, you remember back in 2017 when it hit, was it around above 18,000, and then it dropped down in early 2019 down to about 3,800, 3,900.
We should have bought, I guess.
Well, yeah, that was another entry point, right? But I mean, we have seen, a tremendous run up and another drop in this before. Is there something different about the momentum right now?
That's the right question to ask, Carolyn. It certainly is true. It did have a massive drawdown, just like Amazon dropped 90% in the early 2000s. And the big difference this time is that was more speculative excess rally for really tech geeks. Now it's the mainstream getting in. There's futures, there's central banks potentially, but there's corporate.
Okay, I'm placing an order to sell short euro at 122.654. Okay, 122.654.
Right now, more the same means price should go higher.
What about the emergence of other cryptocurrencies? And we saw that a few years ago when Bitcoin got really popular. Doesn't that threaten Bitcoin's rise?
Tim, that's a key point, and it's really survivor bias. Last year, there was about 4,000 tradable cryptocurrencies. Now there's about 8,000 based on CoinMarketCap.com, but it's a survivor bias that matters. So the Bloomberg Galaxy Crypto Index tracks about 10 of those. So it's the survivors. The winners will win and do well. But the thing is, they don't have the adoption, the oomph, and the robustness. And basically, they're just not adopted like Bitcoin. They might be better, but they're not the best store of value. So the way I like to describe Bitcoin, it's basically a collectible. There's only going to be 21 million ever created. There's 18.5 that have already been created. And it's the one that's being adopted. The market, the world has already said, okay, this is the one, versus like gold is the one, and there's a bunch of other commodities, and there's a bunch of other precious metals.
So wait, really quickly, 15 seconds. Is it a collectible or is it a currency?
I think it's more of a collectible and less of a currency.
That is really wild. You were the perfect voice. Thank you so much. Really, really appreciate it, because I think we're kind of watching it and understanding it, right, Tim?
Yeah, we are. And I just sent my team a note saying we got to get Mike on Quick Take talking Bitcoin.
Great.
Yeah.
Bloomberg Intelligence commodity strategist Mike McClone. I'm going to thank Charlie Vollmer for that, because he's like, you got to talk to Mike. All right, let's get back to world and national news. Over to Nancy in D.C. Hey, Nance.
Hey, Carol. Senate Majority Leader Mitch McConnell is sounding optimistic lawmakers will reach a new coronavirus relief bill before leaving for the holidays.
The bipartisan bicameral agreement appears to be close at hand.
People briefed on the negotiation say the draft of the
Position open at 122.654. Short position.
as well as aid for small businesses, as well as about $17 billion for airlines. It omits, however, aid to state and local governments and lawsuit liability protections. Two members of the Sackler family, which owned OxyContin maker Purdue Pharma, have been taking questions today from the House Oversight Committee. They testified that they relied on professional managers for assurances that the soaring sale of opioids was on the up and up. Congresswoman Carolyn Maloney says the family has never accepted responsibility.
Purdue and the Sacklers worked to deflect the blame for all that suffering away from themselves and onto the very people struggling with the OxyContin addiction.
Democratic Congressman Jim Cooper said watching the Sacklers testify made his blood boil. The suspected Russian hacking spree that has roiled U.S. government agencies poses a grave risk to federal, state, and local governments, as well as critical infrastructure in the private sector. That's according to a new advisory. President Trump has yet to comment, but President-elect Joe Biden says he will make cybersecurity a top priority. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. It is Thursday. Carol Master along with Tim Stanovic. He's back in our Interactive Broker studio. I'm working from home today. This story, though, Tim, it is our second most read on the Bloomberg terminal. And anytime you put anything up about Wall Street and bonuses, it always trends high.
Just going to say that, Carol. I'm starting to see a pattern here. I've only been here for a few months, but once the story is about bonuses, it becomes among the top read on the terminal.
It totally does. And listen, this is the time of year when we start talking a lot about bonuses. And we've actually had a few stories already because of the impact of the pandemic and, concerns about, I think, banks and financial firms trimming some costs. But Goldman is planning to actually boost bonuses for the trading division up by 20%, according to those familiar with the matter, after the business reclaimed its stature as the firm's golden goose. Trading has been a high point or highlight, if you will, among the Wall Street firms this year because of all the volatility.
It has, and it's about time for Goldman because it sort of languished for about a decade, even though it was once the envy of Wall Street. And with this, obviously the firm wants to keep people from jumping to other firms run by Ken Griffin and Stephen Cohen, as the article outlines. But I also see, Carol, we talk a lot about the K-shaped recovery, and we just heard Nancy talk about the aid package, the $900 billion aid package for coronavirus relief. This epitomizes the K-shaped recovery, right? Fatter bonuses on Wall Street, while millions of Americans have benefits running out.
It's the really huge gap. Exactly. We see it in the financial markets. You're right. We see it among the Wall Street firms, which obviously are, directly connected with what goes on in the financial market specifically. And then you've got Main Street where people are just struggling to make ends meet.
Yeah, that's
make ends meet, right? They're basic necessities.
Exactly. And look, it's been a touchy subject in the past, especially following the financial crisis of 2008. But whenever we have a story about bonuses, it gets a lot of attention for a lot of reasons.
Especially in a year where you're seeing the banks. I mean, they are, seeing staggering gains, and you're seeing, huge jumps in some of their businesses. So, as we said, though, our second most read story on the Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A lot of excitement on Wall Street, looking at records for the Dow, the S&P, NASDAQ. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading in the green amid a choppy session. Dow's currently up 115 points. S&P's up 17. NASDAQ rises by 78. The U.S. 10-year-old at 0.9%. Gold trading higher by 19. And transports gain 131 points. Among the main 11 S&P sectors, only energy and telecom were in the red. And leaders to the upside in the Dow, J&J, Home Depot, and Visa, while Boeing and Intel led to the downside. After earnings, Jabil rose as much as 10.6% to the highest since November of 2000. And in others, Bitcoin soared as much as 12% to a new record. Citron called DoorDash the most ridiculous IPO of 2020, and Robinhood to pay $65 million to end an SEC probe. Wrapping things up, FedEx reports after the bell. Live from the First Word Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. We'll be all over those FedEx numbers as they break. We'll ship them out as we can. This headline from the Bloomberg Professional Service, San Francisco issuing a travel quarantine effective December 18th. And to hear live breaking news over your Bloomberg, type SQUAWK, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Ship it out. I caught that, Charlie. I saw what you did there. Very nice.
It was
very
subtle.
Nice. I know. All right, Charlie Pellet, thank you so much. It is time for our weekly Bloomberg Green segment. It is brought to you by PGIM. It's the investment management business of Prudential. Join the pursuit of outperformance at PGIM. Learn more at pgim.com. That's PGIM.com. So we've got a mix of green and luxury, courtesy of Bloomberg News U.S. luxury reporter Kim Basine, who caught up with Patagonia's new CEO and heard a little bit more about how he's plotting for the future. It is definitely a green one at that. Kim joins us on the phone from Queens, New York. Kim, first of all, so nice to be talking with you. How are you?
I'm good. How are you doing? Oh, as good as I can be, you know.
Yeah, I know, right? There's always a caveat. Well, it's good to have you here with Tim and me. So tell us about this conversation and who you caught up with.
Yeah, so I caught up with Ryan Gellert. He's the new CEO of Patagonia, named a couple months ago. The previous CEO stepped down. They said it was a natural jumping off point as Patagonia plotted its future. And Patagonia is going through a bit of a change. So over the past 4 years, they really doubled down on their activism, their environmentalist activism, and very anti-President Donald Trump activism. And now, with him exiting office shortly, they got to figure out what to do from here.
Yeah, it's a fascinating article, Kim. I love talking about Patagonia. I've been following the company for years. I think a big part of it is because I'm from the Central Coast of California, where Yvon Chouinard started this company in Ventura. And it's just like, it's seen amazing growth, but at the same time, it's been allowed to do a lot of this stuff because I think it's a private company. And I think that really differentiates it from a lot of the companies that we cover here. Kim, it really struck me what the company did for the election. It gave employees 4 days of paid leave to serve as poll workers. They were given time to write letters and text environmentalists, encouragements to get out and vote. Is this something that will continue under this new CEO?
It is. So over the course of the Trump administration, they sued the administration over a battle over public lands. They fought, oil and gas allies. They tried to get rid of some of his appointees for federal agencies, and that naturally means there's a whole lot, 74-ish million Trump voters who are not going to agree with that and not buy the pullovers and jackets that Patagonia sells. But this is what their brand is, and it really worked out for them. So in the first 3 years of Trump's presidency, they set sales records in each of those years, and now they're approaching about $1 billion in annual revenue last year.
Listen, this is an interesting company, and I highly recommend Yvon Chouinard. He's done a lot of talks, and it's just worth sitting down and kind of settling in with it just to kind of understand kind of the ethos of this company. What's interesting, though, because they are so concerned about the environment, they think about sustainability, they think about all the products they make, and I know they've been moving Kim into farming as well, but they've got their own still some things to work on, because I think about they talk about, I think it was a quote that you got from the CEO, we're a white-led outdoor company relying on recreation on stolen native lands that are not yet safe for all. And, there's things that Patagonia wants to work on and continue to work on to make even better.
That was really that really stood out to me, especially seeing all the other corporations out there making statements about first Me Too and then the Black Lives Matter movement over the summer. Everyone tiptoed around it, right? But this was a really stark, blunt statement that they made. Now, going forward, they're really on the environmental side. They're really considering new ways of doing business. So things like clothing rental, things like expanding repair services so that products last longer and thereby reducing waste. He's also wanting to take the brand into clothing resale. So that's things like ThreadUp and RealReal where you ship them old product and then they can resell it from there so that things get reused.
How's Patagonia thinking about its relationship with the Biden administration? What's it lobbying for?
What they're really focused on is the 30 by 30 proposal. That's something to conserve at least 30% of U.S. land and water by 2030. That'll help curtail extinctions and promote biodiversity and hopefully decelerate the climate crisis. Now, because they have this, they never fully agreed with the Obama administration in the first place, so they still have their guard up.
Yeah.
The CEO said there was a lot we agreed on, but there was also a lot we didn't agree on, and he expects the same with the Biden administration.
Hey, just quickly, just got about 25 seconds. Does he expect more support from kind of the corporate private sector when it comes to environmental issues? Because a lot of people talk a lot, but I do wonder about actions, whether they're keeping up with it.
I think they're trying to prove out this formula, right? They're trying to prove to everyone that you can make a bunch of money and you can also be good for the environment at the same time. And if they can do that, then, well, other people will pick up on it.
Fingers crossed, man. Everybody always talks still about that Black Friday ad they did a couple years ago. Where
Don't
buy this jacket.
Yeah. And look, it worked for them. People bought the jacket.
People bought the jacket.
Even though they were closed on Black Friday.
And it wasn't their plan.
Yeah.
Kim Basine, great to hear your voice. Bloomberg News U.S. luxury reporter Kim Basine. Check out all of his work on Twitter at Kim Basine. Also, you can go to Bloomberg.com or the Bloomberg Terminal. Listen, I am kind of all in on this company too, right? They're not perfect, but they're trying to make it better.
They are. And I really like the idea of buying less and using less, consuming less. They're making more out of recycled fibers. It's a fun company to follow too. The book that Yvon Chouinard wrote in the early 2000s, Let My People Go Surfing, the first business book I read, Carol.
Is it really? That's a good one. I could see that being your first business book.
1155 to New York, Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 1061 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
My house is freezing.
The studio is freezing too.
It's like, but you can put in a ticket. If I put in a ticket, aka my husband, he's like, "Are you kidding? Now you're cold."
I put in a ticket and they turned up the heat. So ask and you shall receive.
I'm a little jealous. All right, we're going to get to Dave Wilson and his chart of the day in just a moment. First up, back to your top business stories, and let's look at that trading day. We've got 29 minutes to go, Charlie Pellet.
Indeed, 29 minutes to go ahead of the closing bell. Lots going on this Thursday. San Francisco issuing a travel quarantine effective December 18th. We've got the Dow, the S&P, NASDAQ, all trading at records right now, right to the numbers. Stocks are pushing higher on optimism about a stimulus deal. S&P up 15 to 37.16 right now, up 0.4%. The Dow up 114, up 0.4. NASDAQ up 66, up by 0.5%. 10-year down 430 seconds. 10-year yield there 0.92%. This headline from the Bloomberg Professional Service: U.S. states were also hacked as part of that suspected Russian attack. We heard about a number of government agencies, and now word is states were also hacked. A developing story. Stay with Bloomberg for the very latest. The Dow, the S&P, NASDAQ all advancing. As I mentioned, we've got gold up $19 the ounce, up 1.1%, $18.84 right now. West Texas Intermediate crude up by 1.1%, $48.34 a barrel on West Texas Intermediate crude. Dr. Jason Farley is a nursing professor at Johns Hopkins Bloomberg School of Public Health, and on Bloomberg Television and Radio this morning he said, if you are thinking about heading to family gatherings for Christmas, don't.
Here in Baltimore, we have opened our field hospital again and are needing to send patients from our emergency departments who don't seem like they need admission directly to our field hospital. So it is an extremely important issue, and I highly recommend all families consider strongly not traveling and not visiting for the holidays.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Job cuts at the Coca-Cola Company, cutting 2,200 jobs worldwide, including 1,200 in the U.S. as the soda maker deepens its restructuring efforts amid ongoing shutdowns of soft drink-friendly venues like movie theaters. Shares of Coca-Cola, they are trading higher today. An update for the rest of the market. Coca-Cola up now by 0.2%. Recapping U.S. markets, looking at records right now with the S&P up 14, a gain of 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much for that update. You're listening to Bloomberg Business Week. Carol Masser along with Bloomberg Quick Takes, Tim Stenovic, and this is Bloomberg Radio. You know who this is?
Golden Lady.
What?
Did he Golden Lady? Is that what I'm hearing?
But do you know who it is?
Stevie Wonder.
Okay. Phew. Yeah, I was really getting a little nervous.
Yeah, don't worry. Sometimes I get it, Carol.
Save me now. Well done. Dave Wilson, great song. I don't know if any of you watch, okay, don't judge me, The Masked Singer, but somebody did like a Stevie Wonder, and it's just like, every time you hear a Stevie Wonder song, it's just so great.
Well, I can tell you.
Tim is judging me.
I have not. I see clips of it on Twitter, Carol. That's where I watch it.
Dave, do you watch The Masked Singer?
Off and on. I saw that Leanne Rimes was the winner.
She won. I mean, it's unbelievable, the people that they've got, like, getting into those crazy costumes and singing, but I just like music, so it's just kind of fun.
And now they got a spin-off called The Masked Dancer.
Which makes no sense. My husband and I are like, okay, you're going to put on a mask, you're going to dance around. Aren't you going to kill yourself while you're doing that? I mean, come on. I don't quite get that.
Knows? In any case,
all right,
why
Dave.
that song?
Focus us all, please.
It's the reference to gold. That's what counts. You know, because the chart's looking at gold mining stocks, and you know, it's inspired by a report out of Credit Suisse, Andrew Garthwaite, who's a global strategist, among other things, you know, taking a look at gold stocks relative to the broader market. And since he's a global strategist, he's looking at them on a global scale, specifically comparing the group to the MSCI All-Country World Index, which is the broadest indicator MSCI has. It's tracking developed and emerging markets. I mean, institutional investors use it as a benchmark, you know. And what you see when you make a valuation comparison, so we're talking relative value here, he looked at what are called forward price earnings ratios. So go out 12 months, take the projected profit, and come up with a PE ratio from there. And when you ran the numbers on the Bloomberg terminal using these indexes, you found out that as of yesterday, the gold stocks, the miners, were 36% cheaper. Now, you go back 2 years, you see they were more expensive by as much as 65%. So, the headline of the chart refers to a valuation tailspin. That's what we've seen in the stocks. In fact, Garthwaite, using some different indexes, figures that the gold miners are about as cheap in relative terms as they've been in 20 years. And he's figuring with Credit Suisse's backing that we're going to get a rally in gold, a strong bull market, as he put it, and the mining stocks are going to benefit from it. I mean, and they're already cheap, so in relative terms at least. So he's suggesting maybe you buy some. And if you want to know more, folks, send me an email. I'll get you the chart. The explanation goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So, Dave, what's so interesting about this is I think back to what we learned about Warren Buffett earlier this year, that he bet on gold. And we know Warren Buffett looks for values. And this is sort of showing that perhaps the Oracle of Omaha, as he's called, might be onto something, right?
Well, you can certainly draw that conclusion. Like I say, my chart only goes back to 2013 or so because that's the limitation of the MSCI data on the Bloomberg terminal. But, you go back 20 years and you see that, this relative ratio is as low as it's been over that time. Well, you can understand why, someone like Warren Buffett would take a look perhaps at gold miners or gold-related shares. So.
All I'm going to say is I'm thinking to our conversation we had with Mike McGlone about Bitcoin and how maybe Bitcoin becomes the new gold going forward, especially in an increasingly digital currency world, and whether that becomes kind of the new safe haven going forward.
Yeah, and no doubt that kind of thinking plays into why it is that the gold mining stocks have fallen in terms of their valuation, relative to the broader market. So, it does fit into the cryptocurrency story that way. And by the way, we're going to come back to it with my stock of the day, cryptocurrency. Just saying.
Dun, dun, dun. That's called the deep tease.
But it's a good one for today, considering what Bitcoin has done today and yesterday.
Yeah, it's really, Dave, what do you make it? Just got a few seconds here. I do think what Mike McGlone said about it's different from the run-up that we saw back in 2017.
Well, and the difference is that you're actually seeing sort of big money, you might say, go into it. There's a column out, I believe it's from Mark Gilbert and Lionel Laurent on
I saw
Bloomberg
that.
Opinion, talking about hey, big money's going in, but maybe you shouldn't if you're a smaller investor. So that may be well worth reading.
Right, and he talks about the increased digitization of our world, like it just kind of fits in. Dave Wilson, we'll see you in a little bit. Right now, let's get back to world and national news. Back over to Nancy Lyons in our D.C. studio. Hi, Nancy.
Hey, Carol. Lawmakers are reiterating a deal is close on more coronavirus relief. The proposed $900 billion package would likely include a new round of payments to Americans and enhanced unemployment benefits, this according to Senate Majority Leader Mitch McConnell.
We're discussing extended important unemployment programs at the particular urging of President Trump and Secretary Mnuchin, who have continued to be the champions of cash relief for American families.
I'm placing a stop on profit for euro at 122.634. That's it. Stop on profit, please.
During the pandemic. Bloomberg's Nathan Hager reports.
The group is organized by the Interfaith Center on Corporate Responsibility. They filed shareholder resolutions saying that companies could prevent outbreaks and store closures if they let employees quarantine and recover at home while receiving pay. Walmart, CVS Health, and McDonald's are among the companies that have been contacted. CVS says it already offers paid sick leave to employees who work at least 30 hours a week, and offers 14 days paid time off for anyone who tests positive for COVID-19 or needs to be quarantined as a result of potential exposure. In Washington, I'm Nathan Hager, Bloomberg Radio.
President-elect Joe Biden is adding more diversity to his cabinet. People familiar with the matter say he plans to name New Mexico Congresswoman Deb Haaland as his Interior Secretary. She'd be the first Native American to lead the agency overseeing tribal affairs. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons with a World and National News Update. Carol Massar along with Tim Stanovic of Bloomberg Quick Take. And this story has trended high. It's among our most read on the Bloomberg today. It has to do with Smith College. It's one of the richest U.S. liberal arts schools. It is splitting with its longtime outside investment firm to manage its more than $2 billion endowment. I feel like, Tim, this is a trend we've seen over the last couple of years.
Yeah, it certainly is. This move from Investor will enable the women's college to have, quote, greater direct control over its largest financial asset. That's what President Kathleen McCartney and Allison Overseth, who's chair of the Board of Trustees, said in a statement that was released today. This coming from our article by Janet Lauren. This is a big move, and this is probably why it is among the most read here, because this is a significant move for the one of the richest U.S. liberal arts schools.
Well, we talk so much about the amount of money that's in colleges and universities, and these endowments, especially with some of these, universities. You go to the Ivy League, we're talking about huge, massive investment funds that have increasingly gotten into alternative assets and investments. And what's interesting is, a lot of them have often farmed it out, and increasingly we're seeing it all come in-house.
I think it also comes at a time, too, Carol, when people are questioning the value of in-person education. I mean, I went to a small liberal arts school. It was expensive when I went to it. It's even more expensive now. It's unbelievable how expensive these colleges have become. And with the rise of remote learning and colleges and universities learning what students can do off campus or remotely, I wonder if the demand is going to be there for those small liberal arts colleges later.
I do worry about what's going to happen after this year, because we're seeing that financial pressure on, as you said, some of these smaller liberal arts schools. I do wonder about it. I also just sometimes get kind of frustrated by all the money that's become part of colleges and universities when it's really just supposed to be about learning.
Yeah, I mean, in my college, it was like I was in school at the time when everybody was talking about the best dorm to live in because it had the best food. And I remember visiting with my parents, and they were like, the food in college is not supposed to be good.
Exactly.
Yeah, that's what you're paying for, among other things.
It's supposed to be part of the
food was
experience.
good, by the way, at my school.
All right, good to know, good to know. You are listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. With the Dow, the S&P, NASDAQ all trading at records. Stocks are advancing on optimism as lawmakers continue to wrangle over a federal spending deal. The S&P up for a third day. Republican and Democrats still, though, unable to reach an agreement that would assist millions of Americans who face losing virus-era assistance later on this month. The important thing, though, those negotiations continuing. S&P up 17 at a record 37.18, up 0.5%. The Dow up 128, up 0.4%. NASDAQ up 82. That is a gain of 0.6%. Again, the Dow, the S&P, and NASDAQ all advancing to records. 10-year on 5/30 seconds, 10-year yield right now 0.93%. We've got gold up 1%, up $18 the ounce at $18.83, and West Texas Intermediate crude up 1.2%, $48.40 for a barrel of WTI. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is time for the drive to the close, and joining us this Thursday, back with us is Alan Lance. He is research director at lanceglobal.com and president of Allen B. Lance and Associates. He is with us once again on the phone from Toledo, Ohio. Alan, nice to have you back with us with Tim and myself. How are you? What's Ohio like right now?
I'm doing well. We got an inch of snow compared to your 12 or 13, I guess. So
yeah,
we'll take that. But everything's going well here in Ohio.
All right. What's the virus with you guys right now?
Well, we basically have been more open than our neighboring state of Michigan, but we do have a 10 p.m. curfew, so businesses are closed and restaurants are still open to anywhere from a 25 to 50% capacity. And so far, everything's stayed open as opposed to Michigan, which has locked down another few weeks. So.
Yeah, well, we are certainly not seeing these concerns play out in the stock market on pace to be a record day, as we heard from Charlie earlier. Alan, I want to get your thoughts on valuations right now, because our producers tell us that, one thing that you see right now is that this is different than 2007, despite the fact that we see stocks at highs and we see real estate at highs right now, too. What's your take?
Yeah, we get that question about 2007. We had warned that we couldn't really find anything in the international or domestic equity arena or real estate arena that was in bargain territory. And today, I think it's different. I can see the comparisons because we're hitting new all-time highs again. But we've had energy that's been down tremendously. This year has actually been pretty predictable. We were even though it's been a strange year and the volatility has been excessive, we were taking profits the end of January, early February. The market went up another 3 weeks, and then obviously we had the John Templeton, buy when there's blood on the street type of March, where there were some incredible bargains, and then the markets recovered as almost like a textbook fashion, where you saw the quality dividend companies moving up, right after the stay-at-home surged, and then now, the fourth quarter, we've seen the cyclical small caps and internationals catching up, so the rally's broadening out, and I think that's healthy. Well, in 2007, what we had is everything moving up from utilities in China to every category in the U.S. and we really couldn't find any bargains. We're still finding bargains here.
All right, don't judge me, don't hate me, but Alan, I felt like this was a year where you could time the market, because I thought about it early this year too. It's like we just ran up so quickly before kind of the COVID fallout, and I'm like, God, if I kind of just dropped out in February, it would have been a pretty decent year. And then, of course, when the market fell off, you knew that there was going to be, history has taught us that the government's going to help us out, the Fed's going to help us out. It was almost, as you say, kind of textbook predictable. And I do feel like we're getting to a market environment where I know it goes against everything I've ever learned about timing the market, but we know that when the market drops off, the program trading kicks in, and then the market goes up again, and then when it gets too lofty, it sells off a little bit, and then it comes. I just feel like we're getting into that kind of a rhythm.
Yeah, and it's a supply and demand, Carol. So you're totally spot on. Where now you're seeing the IPOs, but again, unlike 1999, these IPOs are still high quality. So I think you're going to get that supply filling up the demand, and then it's going to be a situation where less and less quality IPOs will come out in 2021, and that's the time again where you hate to do it, but you got to time a little bit and take some money off the table. The other thing that we like is we're seeing takeovers. We talked this summer about Alexion Pharmaceuticals, and that got a nice 30-40% premium takeover, and I wouldn't even sell it here. I think you could have another bid coming in, or I don't mind owning the AstraZeneca, because that stock has underperformed. So, where in 1999 you got a takeover, you run with it, cash it out, and you don't wait for it to close. Now you can still say that the stock's trading at historically low multiples, even being taken over. And part of that is there was a two-product company, and with AstraZeneca, it's going to be, higher margins and a multiple expansion because it was discounted because, they didn't have the pipeline and they didn't have a broad selection of pharmaceuticals. And there are still other companies like that I think offer opportunity that investors have ignored most of the year. So in that respect, it has been, unexpected year from the, volatility standpoint, but really textbook in design all the way through.
Alan, are you getting lots of questions from clients about Bitcoin right now? It's a story we've been talking about all day, hitting a new record. It's below 23,000 right now at 22,700. But is that something that clients are showing interest in?
Yeah, Bitcoin, I mean, we saw that attractive, into the sell-off again because, just even Amazon went down, in the early days of March and into the pandemic. Now, those are one of the areas and some of these cult-type stocks that, we would not be chasing. So when we get a lot of inquiries from subscribers and members about, should we be buying Tesla? Should we be buying Bitcoin? It's usually a little late in the game, and we don't really want to participate.
Scott Minard says Bitcoin's going to 400,000. So I'm just going to tell you, Alan, it's way early in the game, according to him and some others. Especially if you think about it, I go back to my economics work. It's just like supply and demand. There's only going to be a limited number of Bitcoins. That by kind of its own essence just creates an entity that's going to go up.
Yeah, the problem is the same thing with blockchain is everybody has to participate. With the internet and emails, you had that. Will you have that with Bitcoin, or will something else come out? So Bitcoin in itself, if that ends up to be the digital cryptocurrency, then all that hyperbole is will come to fruition. But are you willing to take that risk that something else won't supersede it or take over? So many times when you're an industry leader, you don't end up 10 years from that day be the one that still is out in the forefront, and that's where investors have to realize the risk that they're taking.
Just wish I'd bought it when it was like,
you and me both,
fraction of a cent.
Yeah.
You could have thrown like $20 at it, even $100 at it, and it would have been.
But we'd still be here doing this because we love it, Carol.
That is actually very, very true. Good stuff. Good stuff. All right, we're going to continue tracking you to the closing bell as well. Tim Stenovic, Carol Masser, and this is Bloomberg. Here comes the close.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it. Sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Thursday, December 17th. Folks from Avangrid ringing that closing bell. The Dow, the S&P, NASDAQ, and Bitcoin, all at records. S&P up 21 to 37.22. That was a gain of 0.6%. The Dow up today by 147 points, up by 0.5%. NASDAQ surged 106 points, up by 0.8%. So the Dow, the S&P, and NASDAQ all rallying today as lawmakers continue to wrangle over a federal spending deal. S&P 500 index up today for a third day. 10-year yield 0.93%, down 430 seconds. Gold up today by 1.1%, up $19 the ounce at $18.84. And West Texas Intermediate crude up 1.2%, $48.41 a barrel on WTI. So again, S&P up 21 to a record 37.22, up today by 0.6%. Chris Harvey is head of equity strategy at Wells Fargo Securities, and he's got this advice for investors.
Our stock market call for 2021 is very pedestrian. We're looking at mid-single-digit returns. And what we've been saying to clients for some time is if you want higher returns, if you want more competitive rates of returns, you need to look down the market capitalization, smaller caps, you need to add more cyclicality, higher COVID beta, and you need to start going into the financials.
Among today's standouts in the S&P 500 index, homebuilder Lennar after earnings up today by 7.6%. Also surging after earnings, the consulting firm Accenture, it was up today by just about 6.9%. Two of the other stocks that saw big moves today, Scopus Biopharma, that's a cancer therapy developer, it soared today by 473%. Another biopharma stock that moved today, medical technology, Vivus Therapeutics, up today by 34.4%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Whoa, yeah, what I say.
Nobody move a muscle. Bloomberg Business Week. Movers and shakers.
Damn, Stiffy, you got some moves.
On Bloomberg Radio.
All right, everyone, it is time to take a look at some of the movers and shakers on this Thursday. Carol Masser, along with Bloomberg Quick Take anchor Tim Stanovic, and just quick.
I close position on euro at 122.634. We have 200 pounds in profit.
Reels up about the same. Bottom of the pack, communication services just down about 1/3 of 1%. Energy names were down about 0.6%. And if we take a look at the S&P 500, I mean, obviously this is going to mirror what we just talked about. You did have 364 names higher today, 136 lower, 6 unchanged. So more of a risk-on trade.
Yeah, we see, as Charlie mentioned, Lennar finishing the day higher by 7.3%.
Yeah.
And we also saw another home builder, Pulte Group, higher by 5.3%.
Yeah, those housing names just continue to churn higher. Let's bring in Bloomberg News cross-asset reporter Sarah Ponczak. She's on the phone in New York City. It's amazing, Sarah, but here we are. We're, rallying to new records.
We are. We have records today in the S&P 500, the Dow, the NASDAQ, the Russell 2000, you name it, pretty much all of your major benchmarks. And you were just talking about some of these home builder stocks. We had strong earnings. We also got more strong housing data today. The housing market is surely on fire, but that is on the flip side to some negative economic data that we did get today as well, and that in the form of initial jobless claims. So today we saw 885,000 initial jobless claims. That was an unexpected increase, and this is just the next in the series. This came after last week, in which claims data was weaker than expected. This comes after yesterday, in which retail sales were weaker than expected, and yet the market continues to move higher. And I don't know how many times we can say it. I don't know how many times you can hear it from investors and strategists. The fact that the market is looking forward, and even as we continue to see that the economy is sputtering, the economy is stalling out, we are likely going to see further strict restrictions due to rising COVID cases in the next couple of weeks. We know in New York City, definitely, well, not definitely, but we know that it has been floated by Mayor de Blasio and other areas of the country where we're seeing rising cases too. But the market is just looking approaching at that point in which we are going to see a vaccine be rolled out completely and successfully, and also the potential for a new fiscal deal.
Sarah, I'm really glad you brought up the jobless claims data that we got earlier today, because it really surprised me the way the market reacted. Typically, when you see a miss like that, we see stocks react in a certain way, and that wasn't the case today. Is it just because they're being offset by optimism about a stimulus package coming soon? I mean, why didn't we see stocks move lower on the jobless claims?
That's certainly part of the reason, and what some investors and traders are pointing to. We're back in this regime, and I've seen this repeated a couple of times now, not even since last week, the week before, when we got that weaker than expected non-farm payrolls print, that all of a sudden bad news is good again. And this is something just so weird if you're not in the financial industry to hear why would bad news be good news. But the expectation and the understanding is that if you continually see weak economic data and you can prove that the economy is sputtering, well, maybe it forces Congress to get their act together, come to the table, and finally get that deal done that we have been hearing about for so long now.
Right, and keeps the Fed with really easy monetary policy for lower for longer, right? And it often pushes people into riskier assets, and certainly we've seen that play out in the equity markets. We saw it for a long time, Sarah, coming off of the financial crisis.
Well, that's exactly the point here, and the Fed has really been so important to financial market performance all year long, as it will be next year too. And that is a large point in the bullish outlook that we see going ahead to next year, this idea that we are going to see a growth rebound and a recovery of some sort, but it's likely going to be an unequal recovery. At the same time, it's going to be a very, very long time potentially to see a full recovery in the labor market, a recovery that reaches all areas, people of all areas of socioeconomic status. And what that means is that if the Fed is not going to see, as Jerome Powell called it, substantial progress on its dual mandate, particularly on the labor side, then the Fed's not going to move. So we're going to have very easy financial conditions for a long time, likely.
Bounce down, and the bounce back is always harder than the fall off, that's for sure. Sarah Ponczak, thank you so much. Bloomberg News cross-asset reporter Sarah Ponczak. This is FedEx earnings cross, 483 for the second quarter adjusted EPS. That's a beat, and we are seeing the stock just a little bit higher here in the after hours. It's up about 0.4%. All right, you are listening to Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson! Hey, Mr. Wilson. Dave Wilson is back, Bloomberg Stocks editor, with his stock of the day. Dave, what do you got for us?
Silvergate Capital. It's a bank holding company that focuses on business. Now, the company has an area of expertise that sets it apart: cryptocurrency exchanges and other providers of financial technology, fintech, if you like. Silvergate was founded in 1987 and went public in November of last year. The ticker is SI. Now, the shares were first sold at $12 each and fell as low as $7.60 in March when U.S. stocks were tumbling. Silvergate recouped the loss within weeks. Then it took off this quarter, along with Bitcoin and other digital currencies. The shares have more than tripled so far. Now, almost every analyst covering Silvergate has recommended buying the stock since its debut, according to data compiled by Bloomberg. The only holdout was Keefe, Bruyette & Woods, KBW. And today, the firm raised its rating to outperform from market performance. So they followed the lead of their peers. KBW also raised its share price estimate on Silvergate by 86% to $54. While the target is the highest in a Bloomberg survey, the stock came within 30 cents of hitting it today, and it closed with a gain of almost 16.5%.
That's a big move.
You're not kidding. It's a big move this quarter.
Carol, you get the understatement of the day award. No, but I mean, really, it's just a reminder that, we are just seeing some I don't know what you're going to call it volatility, just big moves in certain names.
Yeah, and this is a way to kind of get into Bitcoin and all the rest without actually owning the currency, because it's a company that works with a lot of these exchanges. So, as places like Coinbase go public, Silvergate actually works with Coinbase. So it all kind of fits together.
The stock's up 34% this week.
Wow.
Yeah, good stuff. Dave Wilson, thank you so much. Tim, you're gone.
I'm gone. I'm still here, but I'm leaving soon.
You have a long day. I know it starts really, really early.
It does, but I love it.
All right. Everybody catch Bloomberg's Tim Stenovic over on Quick Take at 9 a.m. tomorrow morning. All right, Tim, have a good evening.
Thanks. You too.
This is Bloomberg. All right, let's get back to world and national news. Over to Ed Baxter. He's in San Francisco.
Hi, Carol. Not good news coming out of Los Angeles. The greater Los Angeles area, now the worst hit U.S. metro area in the nation for COVID-19. Hospitals, mainly in the more rural areas, are running over capacity. In one area, Apple Valley, Dr. Raman Dhillon says he just handled 10 cardiac cases.
It's critical right now. This is kind of like it's like being in war. I've never seen so many code blues all in one shift.
And deaths reach a new one-day record in the state. Meanwhile, California has instituted what is called its mass fatality program, which coordinates mutual aid across several governmental agencies. It is defined as more deaths at one time than medical examiners can handle. San Francisco, meanwhile, has issued a quarantine notice effective tomorrow for travel. Northeast, digging out from one of the most active snowstorms in many years, there had been some concern about a slowdown in delivering vaccine. Well, New Jersey Governor Phil Murphy says there might be a slight delay.
I'm not aware of any place that was expecting it that won't get it. It might just be a little bit later than otherwise expected.
And on the subject of the vaccine, the FDA Advisory Committee meets today for potential recommendation.
We have one topic for today, a topic to discuss and vote on, the emergency use authorization of the Moderna COVID-19 vaccine.
Dr. Arnold Monto saying if recommended out, full FDA will look at as expected. First arrivals could be next week. And Interior Secretary Joe Biden has tapped Deb Haaland to lead Interior. She could be the first of American Indian ancestry in the nation. In San Francisco, I'm Ed Baxter.
All right, much appreciated, Ed Baxter there in San Francisco. Joining me right now is Bloomberg's Charlie Pellet. And Charlie, these are the stories I feel like, we see them every couple of days. And this is about what's going on, especially when it comes to New York City, its real estate market, and in particular, those big office towers down there on Wall Street.
Exactly. And the problem is there's nobody inside those buildings. They look great from the outside, but inside, very few people. Why? WFH. We're all working from home there.
I was worried. I was worried where you were going there, buddy. I'm just
so are our listeners. That's what I like to do, though. But the point is, we're all working from home. Nobody's heading into these big office buildings. And I got to tell you that there's collateral damage here, stating the obvious. But, you think about the people that you would pick up your morning cup of coffee from, to use an example, before heading into the office. Right near our office complex in Midtown Manhattan, I will be stopping by a coffee cart on the street there, say hello to my favorite coffee vendor every morning, pick up a pastry and a coffee. And, she was a wonderful woman. I haven't seen her in months. Have not seen her in months.
I know, right? And listen, I think there was so much expectation, enthusiasm, optimism that by this past fall that we would be back at work much more easily. And we know it just hasn't played out that way because the virus has come back with a vengeance. And yes, the vaccine is rolling out, but that's going to take time because we have to prioritize who needs to get that vaccine first up. And also we're ramping up production. It all takes time. There's also some nervousness in the market. And as a result, whether it's downtown, whether it's midtown, you're seeing those office towers stay quiet. And as a result, that whole, I call it the supply chain, whether it's coffee, whether it's getting your shoes fixed, whether it's going to the dry cleaner, all of this has been impacted.
Exactly. And I just want to say, too, that as a footnote, perhaps the thrust of our Bloomberg story, how do we know this? Data from Placer AI keeps track of people who are walking in the vicinity of One World Trade Center, Empire State Building, and the offices for Alphabet's Google, among others.
Yeah, it's pretty cool. And you can find it at Bloomberg.com. It's all about foot traffic. It's like the data like hedge funds would use, right, to figure out what's going on in the world. All right, Charlie, thank you. You're listening to Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. After the bell, we heard from FedEx. It did report adjusted earnings per share for the second quarter that beat the average analyst estimate. FedEx shares, they are trading lower right now, down by about 3.5%, but FedEx says it will not provide an earnings forecast for 2021. It does see earnings growth in the second half of next year. The Dow, the S&P, and NASDAQ all surging to records today, even as lawmakers continue to wrangle over a federal spending deal. S&P 500 index did advance today. We've got the S&P, as I mentioned, moving higher. S&P today up by 21 points, a gain there of 0.6%. Dow Industrials up 148, higher by 0.5%. NASDAQ also at a record, up today by 106 points, up by 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie. And Charlie's setting us up well for our next segment because we're watching shares of FedEx down about 3.3% in the after hours following their latest quarterly update. So here's what you need to know about the quarter. Let's check in with Bloomberg Intelligence Senior Transport, Logistics, and Shipping Analyst Lee Klaskow on the phone from Scotch Plains, New Jersey. Lee, good to have you here. Stock is down in the after hours. Why is that, based on what you're seeing from the quarterly update?
Yeah, hi, Carol. Good afternoon. Thanks for having me. Just real quickly, I mean, the bar really was set extremely high for FedEx going into this quarter. And, you know, while they beat expectations, I think some people might be poking around the ground segment. Margins, you know, were good at 7.5%, but the operating income was $100 million lower than consensus expectations, and I think that was really driven by higher employee compensation and purchase transportation costs. I mean, they're probably paying a lot of overtime to make sure those packages get to their destinations on time, and then purchase transportation costs have been rising given this spike in truckload we've been seeing over the last couple of months. So net, I think it was a good quarter, even might say a great quarter.
Right.
But just because where expectations were, I think just people taking some money off the table. And we have to remember the stock is up 115% over the last 6 months.
Well, that's what I was just going to say. I mean, year to date, it's up 93%. I have to say, you know, I've caught some stocks. I hadn't seen that FedEx was up that much. I mean, that's just kind of off the charts.
Yeah, and then if you look at the 2-year average, I mean, it is up a lot. It was up around 83%, and which is mostly in line with where UPS is. FedEx kind of fell out of favor over the last, you know, I would say in 2019 and a little bit into 2020. People started revisiting the stock, you know, due to the surge in demand that was created from the pandemic, because it really created a new peak season that is a lot longer than the traditional peak season between Thanksgiving and Christmas. And that surge in demand really provided them with the operational leverage that they really needed, because delivering packages to our homes is a lot more expensive for FedEx than them delivering, you know, 50 business envelopes to a lawyer's office. Those margins are much better than, you know, you getting something from an online e-tailer delivered to your home.
Right. So that's been a tremendous adjustment for a company like FedEx, correct? I mean, this year when all these businesses are shut down versus all of us at home clamoring for everything and anything.
Yeah, you know, it really, you know, they've been very resilient, them and UPS. I mean, what they've been doing, both of these companies, is spending a lot of money on technology to build out their ground or, you know, B2C networks. And, you know, because there was so much demand, you were just seeing the incremental margin from that extra package that might be delivered in your neighborhood is much better than it was where, you know, they just didn't have the density. Now they have that density.
That's a good point.
And, you know, hopefully for them, it'll continue. You know, we believe, you know, the pandemic, one of the good things of it, if you can say that, was that, you know, it kind of pulled demand forward 3 to 5 years in terms of e-commerce penetration. And so, you know, what you're going to see is, you know, when things quote unquote normalize, you know, the person that maybe didn't really buy that much online before the pandemic and started buying a lot online during the pandemic will continue to buy online.
Yeah, I think you're spot on. I think it's people who hadn't done certain things online, whether it was like we've talked about that certainly with the grocery market, but it just in general, people who shifted are probably going to, in a large way, continue that way. So it is interesting. So if you were sitting down with the C-suite of FedEx, what would you want to ask them?
First and foremost, I'm most interested in what's going on in Europe. Their express business was really strong this quarter. I'd like to see how much of that was the TNT acquisition. They made an ill-timed acquisition of TNT back in maybe it was 2017. The company, after they bought it, was hit by a cyber attack and really paralyzed that company. And if it really wasn't for FedEx owning it, the company probably wouldn't be around today.
Yeah.
That network, now that it's up and running and fully integrated into the European business, should really provide a lot of cost savings for them and help them be more competitive from a timeliness standpoint versus the other competitors in Europe. And, before the acquisition, FedEx was a distant third in terms of share, and this is really putting them more on an equal footing to UPS in Europe. We really haven't seen the benefits because it was kind of, if you will, you couldn't really see it because of the issues that they were having from the cyber attack, and then you had the economic weakness that was going on in Europe. So, we're kind of bullish on the long-term viability of that business and how it's going to impact FedEx longer term. And not only that, not only the cross-selling opportunities that they'll have as well.
Right. Got it. And I remember when UPS, right, back in 2012, wanted to buy TNT Express. UPS, FedEx, do you have a favorite in terms of those two companies? Just got about 40 seconds here.
Yeah, in terms of companies, I think that, UPS has a new CEO, Carol Tomé. She really has proven that there's no sacred cows left at UPS. And she looks to really be making investments in technology, not only just to make their network more efficient, but in AI to really improve the overall network. So I think some really interesting things could come out of UPS. But honestly, if you asked me for a favorite, I think FedEx might have a little more opportunity because of that TNT acquisition from a growth standpoint. But I do think that the rising tide of e-commerce really rises both ships, if you will, for FedEx and UPS.
Yeah, I'm watching that UPS CEO too because she came as really an outsider, and typically that's been, as you know, a company that just kind of raises people up within UPS. Hey, Lee, thank you so much. Really appreciate it. Bloomberg Intelligence Senior Transport, Logistics, and Shipping Analyst Lee Klaskow on the phone from Scotch Plains, New Jersey. Quick check, and we do continue to see some selling in shares of FedEx in the after-hours. Stock right now down about 3.4%, but as Lee reminded us, that stock is up 93% so far in 2020. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. I'm Carol Masser right here on Bloomberg Radio. Coming up, we're going to get a little taste of David Rubenstein, host of peer-to-peer conversations right here on Bloomberg Radio and Bloomberg TV. He caught up with a jazz legend. We'll talk about that in just a moment. Let's get back to your top business stories. Once again, here's Charlie Pellet.
Hi, thank you very much. FedEx after the bell, Carol, failed to keep up with Wall Street's soaring expectations as a jump in costs crimped quarterly results. The adjusted operating margin, 7.4% in the company's fiscal second quarter, while significantly higher than a year ago. That did trail FedEx's 8.5% margin in the previous quarter. That is sending shares lower after hours. FedEx down now by just about 2.5%. Coca-Cola cutting 2,200 jobs worldwide, including 1,200 here in the U.S., as the soda maker deepens its restructuring efforts amid ongoing shutdowns of soft drink-friendly venues like movie theaters, bars, and stadiums. And the news on America's labor market is not good. Weekly jobless claims up to a three-month high of 885,000. The nationwide increase in coronavirus cases has forced new public health orders, stressing employers. December payroll growth could stall. We've got, as I mentioned, we saw that jump in first-time claims. As for the labor market outlook, Megan Green is a senior fellow at the Harvard Kennedy School.
I think there will be scarring from this crisis. You're seeing it in the labor market in the U.S. with the number of permanent unemployed rising above the number of temporary unemployed. The number of long-term unemployed has really skyrocketed in recent months. On top of which, you're having a lot of businesses reporting that actually they've been meaning to automate for a while and have taken this opportunity to go ahead and do that. So that suggests a lot of these jobs just aren't ever coming back.
Fiat, Chrysler Automobiles, and PSA Group are pressing to complete their merger ahead of schedule as disruptions to the auto industry add urgency to their efforts to realize synergies from joining forces. Today, we did see shares of Fiat Chrysler Automobiles advancing, ticker FCAU up today by just about 0.7%. A record day on Wall Street today as Washington continues to haggle over stimulus. S&P up 21, a gain of 0.6%. The Dow up 148, also a record there, up 0.5. NASDAQ up 106, up by 0.8%. 10-year yield 0.93%. Gold up 1.2%, 18.86 the ounce. West Texas Intermediate crude up 1.3%, 48.44 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. It is time for the David Rubenstein Peer-to-Peer Preview. It is brought to you by Wells Fargo Commercial Banking, helping customers chart the way ahead in uncertain times. And Jazz at Lincoln Center Managing and Artistic Director Wynton Marsalis recently sat down with David Rubenstein. They did this just about a couple of months ago for another edition of Peer-to-Peer Conversations. And in this excerpt, Marsalis explains how racism was a part of his life growing up and that it still is.
So when you were growing up, you obviously experienced racial discrimination because it was a segregated area then, is that right?
Yeah, that defined the entire segregation, discrimination, racism. That was just a part of life. Like it's not something you could, this is not philosophy I'm talking now. It's just how it was. Your neighborhood looked a certain way, the white neighborhoods were a certain way. Black people generally lived in our area on one side of the railroad tracks. We still had ditches in our streets. And any type of systems always worked against you. And you had to, it was just what the system was. You didn't have distance from it, so you didn't have, it's easy to look back on a thing and experience it not the way you experienced it when you grew in it. When you grew in it, it was very much a fact of life. So I happen to be someone who never liked it. So I fought with it a lot and had a lot of problems in that system, but most people adapted to it and were okay with it. They didn't like it, but they would sometimes you're in a bad situation. In this case, we're talking about racism. It could be anything. It could be a health situation. Right. The degree to which you're willing to fight against it really is based on your ability to accept the pain of fighting against it.
So are you surprised about the Black Lives Matter situation? Here we are in the year 2020. well advanced past the time that you grew up, and we still have racial problems of that type.
Yeah, we're not anywhere near advanced past what I grew up with. So, no, I'm not surprised by it. I had the honor to go into so many American schools throughout the 80s and 90s and early 2000s. It probably well over 1,000 schools. So we have a segregation in our systems in general. So no, it doesn't. None of it is surprising to me.
So today, as a famous jazz musician, you're recognized all over the country and many places around the world. Do you feel you are still suffering from racial discrimination? Do you still feel, even despite your exalted status in the music world, you are really not treated the same as you would be if you were white?
Yes, I feel that. I feel it in terms of the kind of intellectual patronization that I receive, the low level of criticism of our music. I'm subject to things, of course, nothing like what I grew up with, nor do I make a habit of complaining about it constantly. Because I'm also treated in a way, with so much respect by so many people that for me to complain would be past gratuitous. So if you ask me the question directly, yes, I would say I've been treated unfairly by newspapers. Something like the New York Times, the way our institution, Jazz at Lincoln Center, has been covered is abominable. Even though we get articles, the quality of those articles are always very poorly researched. The writers, oftentimes down through the history, lack the intelligence and depth of engagement with the form to be qualified to speak on it in a paper of record. But because it's jazz, it doesn't matter. So that's only in direct response to your question, because I don't want to I don't want to confuse it with when I was growing up or the situations that I found myself in, or my father's situation or grandfather's, or let's go back in the generations. So I'm not doing that. And I'm very, very grateful for how I've been treated by people all over this country of all kinds.
All right, and that was, as you can tell, Jazz at Lincoln Center Managing and Artistic Director Wynton Marsalis, in a very sobering and realistic conversation with the host of the David Rubenstein Show, Peer-to-Peer Conversations, of course, hosted by the Carlyle Group's David Rubenstein, really getting real and talking about what his childhood was like and what he faced and his family when it came to racism, and saying, yes, different today, but it is still out there. And I thought it was interesting when he talked about some of the media coverage of the work that he has done at Lincoln Center and what he still faces, certainly in today's society. You can hear that entire interview that David had with Wynton Marsalis. That is coming your way tonight at 10 p.m. Wall Street time and throughout the weekend on Bloomberg Radio. So really, really worth sitting down and listening to all of that. Hey, coming up, we're going to check in with our Bloomberg Pursuits food editor, Kate Crater. She always gives us some incredible insight and really talks about what the trends are when it comes to restaurants and food out there. As we know, it's been a devastating year. Kate knows all of the people who are involved in that industry. We're going to talk about her, but also how you can entertain this holiday season. She's got some thoughts and tips. We'll get to that in just a moment. Right now, though, do want to get another check on world and national news. For that, back to Ed Baxter in San Francisco. Hi, Ed.
Hi, Carol. The FDA advisory panel has been meeting today regarding whether to suggest the FDA clear the Moderna vaccine for emergency use in the U.S. Former FDA Commissioner Dr. Mark McClellan on Bloomberg says so far so good.
The rare side effects that have been observed with the Pfizer vaccine, these allergic reactions, which do turn out to be manageable if serious, and no other big roadblocks are turning up in the discussion so far.
If advised out, he expects very quick FDA approval. Los Angeles become the new COVID-19 hotspot, setting daily case, hospitalization, and death records. In many rural areas, patients outnumber beds. In Apple Valley, for example, outside Los Angeles, Jamal Willis, a nurse, says it's like working in a war zone.
Just this morning, we ran multiple colds back to back. We had 3 cold blues at the same time. One of our doctors went up and ran those colds.
California's instituted what is called a mass fatality program, which shares aid from other areas, mutual aid. And San Francisco now has issued a quarantine notice effective tomorrow for travel. That means 14-day quarantine if you move out of the area or travel out of the area. Northeast digging out from under its massive snowstorm, concern about vaccine distribution mounted, but New Jersey Governor Phil Murphy says it will be okay.
This storm did disrupt some amount of the delivery of the vaccine, but I believe that is a disruption that will be measured, and it will get there, but a little bit later, as opposed to it's a binary. It was going to get there, and it is now not.
And France has announced President Emmanuel Macron has tested positive, prompting EU leaders to isolate after coming in contact. In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Ed, appreciate that update. Ed Baxter in our San Francisco bureau. Right now, I'm Carol Massard. Joining me once again is our own Charlie Pellet of Bloomberg. And Charlie, this story by our Patrick Clark takes a look at what's happening at Manhattan's hotels. And like we just talked about the office space being shut down. He says at Manhattan's hotels, there are few signs of the festive fervor that the holiday season typically brings. I have seen this as I've driven through the city, right? Usually everything's decked out, all the hotels, all the restaurants. It's not that way this year.
Exactly. The upside, if there is an upside, and no, there isn't an upside, but the upside, if any, is that the hotels are able to use this period to do a lot of long-awaited renovations, improvements. You've got no guests, makes it a heck of a lot easier to do. And I was thinking my own at-home hotel stay indicator. I like those little bars of soap, the little bottles of conditioner, the little bottles of shampoo. And I've got I had a big stash at home. I've whittled that down to next to nothing. Why? I haven't stayed in a hotel in so long, ever since March 13th.
That is so true. I can always tell when I've had a busy travel year that like all of a sudden I just have a bunch like at home. You're right. It's been a very different year. It's interesting. We're going to talk with Kate Crater, our Bloomberg Pursuits food editor, about how you entertain in this COVID-19 socially distanced world. And, you know, one of the things she says is that, you know, the places that we typically have celebrated in the past are changing. Restaurants are apparently turning empty hotel suites into private dining rooms. So some hotels who are managing to open, I guess, are maybe creating some space for people to try and celebrate. But we know that in most of the hotels throughout the city, it's just they're shut down.
Yeah, and I'll be curious to hear that conversation, because celebrating over Zoom, office Christmas parties, birthday parties, bar bat mitzvahs, whatever, it ain't happening over Zoom, at least for the Pellet household. Just want to mention, too, Marriott Marquis, even if you live beyond New York City, that's arguably one of the greatest places to watch New Year's Eve from. Yeah. But this week they announced that they're permanently terminating more than 800 workers. That's how bad it's gotten.
Oh, my gosh, that's just terrible. Charlie, thank you so much for going through this with me. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with FedEx. Shares lower after hours, down by about 3.4%. FedEx disappointing as rising costs cool Wall Street's high expectations. Stocks, though, at records. Treasuries declined. The Dow, the S&P, and NASDAQ all advancing to new highs today, even as lawmakers in Washington continue to wrangle over a federal spending deal. S&P up for a third day. Right to the numbers. S&P 500 index up 21, a gain of 0.6%. The Dow up 148, up 0.5%. NASDAQ up 106, up by 0.8%. 10-year down 5/30 seconds. 10-year yield 0.93%. Gold up 1.2%. 18.86 the ounce. West Texas Intermediate crude up 1.2%. 48.40 a barrel. Got to mention Brent 51.51 up today by 0.8%. Recapping, FedEx lower after earnings down 3.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, appreciate that update. You're listening to Bloomberg Business Week. I'm Carol Masser, and in our 12 days of gift giving, we're delighted and excited to have back with us Bloomberg Pursuits editor Kate Crater, who is writing about holiday entertaining this year, which, like so much in our world this year, is rather complicated. Kate always giving us insight and a hand in what we need to do. She is on the phone in New York City. Kate, I am so glad to have you here. How are you?
Carol, it's almost, this is as close as I get to seeing you right now, but I just want to quickly shout out my best friends from college are such big fans of yours, and they listen to you every day. So Carol, Claire, and Sherry, like every day they tune in to hear you.
Carol, Claire, and Sherry, those are your friends?
Yep.
Hello.
Best friends from college.
That is like lovely, and I love that. And a big hello and a happy holidays to all of them. First of all, they're lucky to have you as their best friend because it's just great. Kate is the best.
Gosh.
So first of all, I know I want to talk about your stories, but I do think about Kate, your world, your community, the restaurants, the chefs that you know, everybody in that world. It's like a stupid question. How is everyone doing? I mean, I'm just thinking the conversations you're having. It's just rough.
We're trying. I'm actually working on a story about things, restaurant, changes I want to see from as a result of the pandemic next year, and it really is like trying to find good things to say about the Titanic. It's just been like a devastating, horrible year for restaurants, and it keeps getting worse. And yesterday, I got to report on a story that talked about how while indoor dining is shut in New York, it's still totally open across state lines in New Jersey, and even in like Westchester and the Hamptons, they're at like 25 and 50% capacity, and it's making chefs here in New York just tear their hair out.
Well, and we talked about that story on air because it was kind of interesting, right? And it's like, how do you get your head around that? You can't have a restaurant open in New York or indoor, but you can in New Jersey, right? It's like, it's a little crazy, but it is allowing, I guess, some restaurant owners to have a little bit more business, I'm hoping.
Yeah, no, I think this guy, Ed McFarland, who has Ed's Lobster Bar, said that even though his place that's in Soho in New York has been shut, his business in the Hamptons is up like 60%. And then some of these other people, as you might have talked about, they're trying to incentivize people to come to eat in New Jersey. Like David Burke said, he would pay people's tolls if they came to his restaurant in Fort Lee, I think. And then Jeffrey Bank, who has Carmine's. I love Carmine's. It's this family-style Italian restaurant, which is at the Tropicana in Atlantic City. He's worked out a deal with the hotel, so rooms are like $44 if you go and eat at the restaurant. And he rightly said that's about how much it costs to park your car if you're in New York City. So they're definitely trying to make the best of the challenging situation.
Well, right, and I guess we all are approaching. I was just texting with somebody about the holidays, and they're like, I'm not going to see any of my family. It's just, I'm not seeing my grandkid. Like, it's not business as usual when it comes to holidays. Your story, though, gives me some hope because you always somehow find some optimism. And so, what's our gut? Like, what do we do here in terms of entertaining? How do we approach it? What are some of the things that you found out for your story?
It was, one thing we found out is that people cannot wait to celebrate the holidays here and around the world. Christmas tree purchases started earlier than ever, and Christmas tree prices are up a little bit because there's like a bidding war going on with them. But I think even in November, people were like going up to places where they sold Christmas trees and starting to order them. And then in England, I thought this was kind of cool. People started, there was like a rush on Christmas puddings in late September.
That is wild.
So
That's called starting really early.
I know, but it just shows that people, I think people cannot wait to have something to celebrate, even if it's going to be virtually, and also just to kick this year out the door. You know, it's just been so challenging for almost everybody.
I agree with you. I just need some tradition, something that reminds me of kind of the way it was, because it's hard to remember the way it was at this point. Here we are, you know, almost a year in with all of this. What about, you know, Kate, I thought it was interesting in your story. I guess there are people who will be ordering out from restaurants, right, during the holidays.
Yeah, that's some intel that came from Comcast, and they were looking at how people plan to spend money, and 48% said they wanted to support local business by ordering restaurant takeout, which is a really nice number. And another thing that's like hopeful is Prosecco sales are booming here. They were up 27%, over $100 million compared to last year. So
it's like the perfect little drink, isn't it? And you could do so much with it.
Anything sparkling. So yeah, no, I encourage everybody to grab a bottle of sparkling wine and start celebrating the holidays, and you'll be right in time with what everybody else is doing.
Listen, we've talked with you too. I mean, people are doing a lot of cooking at home, and I'm assuming that's going to be a big part. That's where people can find some joy, certainly this holiday season.
That's exactly true. Although if they don't want to, there's also been so many restaurants, and especially ones here in New York now, they're doing some pretty deluxe meal kits.
Wow.
So you can get, the 11 Madison Park one has gotten some attention. It's a duck. I think it costs $475, but by all accounts, I mean, I think you get leftovers with it, and but it's a way to go big. But almost any restaurant you can think of, Dan Barber at Stone Barns is doing some really in-demand meal kits. In San Francisco, Dominique Crenn has Atelier Crenn, and she does some fun ones that has like a caviar tart, and her staff do these really fun instructional videos that come with it. So you sort of feel like you're talking. It's, you know, it's like going into the kitchen and meeting the pros and having them talk through your meal. So there are, as you were saying, like there's definitely some ways to make the best of a very challenging situation.
Yeah.
And if you have to stay home, you definitely support your local restaurants, whether it's through a meal kit or takeout. There's a lot of ways to do it.
Yeah, I agree. And listen, we've been doing it. I think we've been like nonstop with takeout, because we're thinking about especially some of our smaller, you know, restaurants, especially in the neighborhood, that are just having a tough time. One really quick thing, just got 30 seconds. Restaurants are turning empty hotel suites into private dining rooms. They're doing that?
Well, yeah, that was another really fun one that's happening here in New York, in Brooklyn, at a place called Le Crocodile. They have Le Crocodile upstairs, and it's so smart. Like there, they take out the beds, but in Philadelphia, Walnut, they call it Walnut Street, is partnered with their hotel, and they have some pretty deluxe suites that they are using. And so if you decide that you are going to like make a big night of it, you can go ahead and book the room, and you have like a $50 credit to it. So they're trying to make it as easy as possible to go out and support these restaurants.
I'm just going to say we can't get to 2021 fast enough.
Exactly.
That's for sure. My
We're
God.
We're going to open some Prosecco, Carol.
Yes, deal. It's a date. Kate Crater, Merry Christmas, Happy Holidays, Happy New Year. You're the best. Bloomberg Pursuits food editor, Kate Crater. Thank you, thank you. And Carol, Claire, and Sherry, Happy Holidays. Stay safe to you as well. And another big virtual hug to our Kate Crater, who is just phenomenal. All right, you are listening to
from Bloomberg World Headquarters. I'm Charlie Pellet. We begin with a developing story headlined from the Bloomberg Professional Service. FDA advisors saying moments ago Moderna's vaccine's benefits outweigh its risks. It was an up day on Wall Street. In fact, we saw records today for the Dow, the S&P, and NASDAQ. After the bell, we did hear from FedEx. FedEx shares, they are tumbling, lower now by just about 3.5%. FedEx failed to keep up with Wall Street's soaring expectations as a jump in costs crimped quarterly results. Stocks notched a solid gain to close at records even as lawmakers continue to wrangle over a federal spending deal. S&P up for a third day, even with Republicans and Democrats still unable to reach an agreement that would assist millions of Americans who face losing virus-era assistance later this month. Right to the numbers. S&P 500 index up today to 3722. As I mentioned, a record there, up 21 points, up 0.6%. Year-to-date gains for the S&P, 15.2%. The Dow up 148 points today, up by 0.5. NASDAQ up 106, up by 0.8%. NASDAQ so far this year up by 42.3%. 10-year down 5/30 seconds, 10-year yield 0.93%. Gold now up 13 cents the ounce at $18.85. West Texas Intermediate crude up 1.2%, $48.40 a barrel. Again, in the year-to-date column, NASDAQ this year up by 42.3%. Given those gains, what would be an appropriate entry point now for investors? That question this morning to Howard Ward, Director of Growth Products at Gabelli Funds.
It's like in hockey. You miss every shot you don't take, and you miss every rally in the stock market that you're not invested in. And you just have to bite the bullet and begin the process of putting money to work. There's $5 trillion in money market funds earning basically nothing.
And today we saw Bitcoin surge through the $23,000 level before retreating. Facebook and Twitter have reversed changes to their content policies that were implemented to stem the viral spread of misinformation about November's U.S. presidential election, saying the temporary changes are no longer needed.